Hello, this is Bruce Wan, Head of Research for MaxCap Group. In this video, I wanted to outline the key themes from our 2024 market outlook to give you a sense of where the world is headed, the implications for real estate markets, and most importantly, how investors can potentially take advantage. Looking back, 2023 was a challenging year with economic uncertainty being the new norm. Low growth and high inflation and consequently high interest rates have all combined to weaken investment returns across a lot of asset classes. Diversification at the same time is becoming much harder to find. Looking ahead, 2024 carries many of these similar themes with some added risks for good measure. Low growth, high inflation, and potentially even high interest rates are still on the cards. Wars in Ukraine and Gaza are still raging on. A forthcoming US presidential election may see the US move in a very different direction by the end of the year. When we look at this chart here, we can neatly sum up how the Australian economic outlook has evolved over many years. What we have seen last year was a year of high inflation and weak growth. We're likely to be stuck in this mode in 2024 and much of 2025. Which will have significant impacts on how we invest. Altogether, these market conditions are still very challenging for traditional real estate landlords. Global commercial real estate investors are still bracing for adverse impacts from sluggish occupancy and lower values and rising distress. Perhaps this is best summed up by the industry catch cry of stay alive till 25 to show their subdued expectations for 2024. For many investors, the year ahead provides a window for some important choices. This new landscape, particularly with higher for longer interest rates, requires very different strategies for capital allocation. Indeed, passive beta returns are likely to be weaker, while there's more scope for alpha returns from active investment strategies. Also, there's going to be a persistent performance gap across different sectors, much like what we've seen in recent years, so there's still a lot of potential gains from simple sector selection. Above all, investors have to adjust to what happened over the past year and a half. With the sharpest rate increases we have ever seen, it's been working a little bit harder to find that explicit interest rate hedge. Out of this market outlook, we do have some advice for investors looking not just to be staying alive in 2025, but adjusting and thriving in 2024. First, seek shelter. We know that some sectors will be very likely to be underperforming. There are more demand and pricing adjustments still ahead for office buildings and shopping malls. This is a time to be remixing portfolios to avoid underperformance and improve overall returns. Second, take more credit. High interest rates have upended a lot of old strategies and investors need to adapt. Indeed, finding that explicit rate hedge is a key goal for many investors in 2024, with real estate credit in Australia being a prime candidate. Third, live a little. In a world with sluggish demand, robust population growth in Australia is driving a lot of housing demand growth across the country. Many living sectors are facing significant undersupply for several years ahead. It is a simple matter of just having enough capital to follow the flow of people. If you want to find out more about this topic and the related opportunities, come and talk to our capital team for more details. This has been Bruce Wan for MaxCap Group.